Good morning and a happy Thursday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: Wall Street in the red on surging cases, Apple's App Store, and earnings update. Wall Street closed in the red on Wednesday with the sell-off accelerating in the final minutes of trading as worsening pandemic outweighed positive developments on the coronavirus vaccine front. The US recorded roughly 150,000 new contagions in the last 7 days and booked a 30% increase compared to a week ago, according to Johns Hopkins data. New York City said public schools would halt all in-person instruction starting the following day in an effort to stem the spread of the virus. Other parts of the country have restricted hours of businesses and restaurants and issued travel warnings ahead of the holidays. The Dow was down 1.2%, closing near its lows after coming within striking distance of a record earlier in the session. The S&P 500 was down 1.2% and the Nasdaq was down 0.8%. Treasuries declined slightly, sending the 10-year yields up to around 0.87. The dollar fell against most of its peers, with the Kiwi among the leading G10 currencies. Asian equity futures paired gains and are little changed. In other markets, the Euro Stoxx 600 ticked up 0.4%. Most major Asian equity benchmarks ended the day higher, though Japan's Nikkei 225 index dropped 1.1% by the close of trading after local authorities said that there had been a jump in coronavirus cases. Pfizer shares rose about 0.8% after the drug maker said that it plans to seek authorization for its vaccine within days. Final results from its joint clinical trial with BioNTech showed its coronavirus inoculation was 95% effective. Tesla was up another 10.2%, adding $42 billion in market cap after the announcement of inclusion in the S&P 500. In 2 days, Tesla has added about $73 billion in market cap. Meanwhile, shares of health insurers were among the worst performers in the stock market. United Health fell about 2.2% and Cigna fell about 1.8%. GoodRx sank to a record low near its September IPO price of 33 after 2 downgrades on the heels of Amazon's pharmacy push. Prime RX will compete directly with the digital prescription company and tamp down its growth. This is according to JP Morgan. And Morgan Stanley said Amazon's deal with Cigna and Express Scripts will allow the retail giant to quickly gain scale. Boeing 737 MAX won approval from FAA to resume flying. The FAA is requiring repairs to a safety system that went haywire in 2 crashes and multiple other flaws discovered during the months of review. It's also mandating new pilot training focusing on issues that arose in the accidents. Shares in fact fell on the news. On earnings, Target shares added about 2.3% after the retailer said sales rose steadily in the most recent quarter as demand for household goods and home office supplies continued to grow during the pandemic. Lowe also reported lows fell after adjusted EPS missed, comparable sales beat though. Nvidia beat on profit and revenue for the third quarter and forecast sales of about 4.8 billion plus or minus 2%. Consensus was for 4.41 billion. In other major news, Apple did some tweak around its App Store pricing. Apple was always going to need to buy its way out of its App Store jam, is what a reporter writes. The company said Wednesday that it will sharply cut the commission it takes on small apps distributed through its App Store. For developers generating 1 million or less in revenue, Apple's cut will be 15% instead of the 30% that has largely been in place since the App Store began in 2008. Apple didn't detail the financial impact of the decision. The move will take effect on 1st of Jan after the end of company's current fiscal first quarter. Just to give you a little bit of color on how the App Store fits into the Apple business model, the App Store is a major business segment for the company, acting as a top driver of growth for its services revenue over the last 2 fiscal years. Analysts estimate the App Store generated about 17.8 billion in revenue for Apple in the fiscal year ended September, and it will surpass 20 billion this year. That would represent about 1/3 of Apple's total service revenue in those periods. The bottom line impact is even bigger. Apple's service revenue generated gross margins 35 percentage points higher than its product side for most of the recent year. So there most certainly will be a bottom line impact as well. It will be interesting to see how this will play out. I'm sure the analysts will be racking up the numbers and seeing how this is going to impact the final valuation. Something that we will watch out for over the next couple of days. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.